Hello, guys. Good morning, and welcome to yet another promising session on the US oil. In this video, we shall be taking a technical dissection of the pair and using the current market structure to identify trading opportunities lining up for us this week. Well, for last week's trading session, it has been a roller coaster of buys and sell before we finally saw the bearish momentum that came in later on in that week. And obviously, this is a follow up to my previous analysis. And talking about follow ups here, I would like to share with you some key moments on the US oil for last week's trading session. And we really didn't have any significant opportunity until on the first day of the month of February. And on the first, we saw an opportunity to sell below the $79 level. Remember, we have been buying right above that structure, but we kept the option of a sell stop order sitting right below the $79 level. So as soon as we were taking out of our buy position, I think in a loss thereabout, we had our sell stop triggered below the $79 level, and we took advantage of that opportunity as price action hit our TP target at around the $76.20 level. Then we were looking out for further opportunities to add more position if price action does a further breakdown of the $72 was it the $76.20 level. That did not happen as price was caught within a consolidation phase between the $76.50 level and the $77.50 area, which lasted about 24 to about 36 hours before we finally saw that breakdown of the $76.40, and that was on Tuesday, on the 2nd. So we joined the move to the downside, but we were taken out actually at break even at that point. However, we had another opportunity. Price dropped further to the downside. Well, it was really a roller coaster of buys and sell. If you really want to have a better perspective into how we took advantage of those opportunities, I will be sharing the link to this commentary in the comment section of this video. And if you are watching this video on my YouTube channel, you will be seeing the link to this daily commentary in the top right hand side of your screen. So we were able to sell below the 75.60 level, and I think we took about 200 pips at the end of the week. Well, if you want to see that, just go through the links as suggested. Diving into the current chart here, what is our expectation for the week? Well, we will want to see what is really going on in this market before we want to be jumping into any conclusion at this point. First of all, looking at the current structure here, I want to lay much emphasis on the structure we have here since the month of November. And if you look at this critically, you would notice that price action has been caught within the channel between the $82.50 level and the 73 $70 area in the last 3 to 4 months now. And if you remember in my previous analysis, we identified a reversal pattern after taking into consideration this impulsive move to the downside, which tested the lowest point the price has ever been in the last 1 year at the $70 level. Then we had something that looked like a reversal pattern in the form of a double bottom structure. And we were looking forward to using the $80 level here, which is a major key significant structure here as our neckline, where we were expecting the breakout retest of both the neckline area, which is the $80 level, and the bearish trend line here to signal a bullish momentum. However, things did not go as expected, as we can see here. As soon as price got into the $82.50 level, we begin to see another wave of selling pressure, negating all attempt by the buyers to break out of that structure. And in fact, price action was caught within the channel here between the $82.50 and the $78 area for like 2 weeks in anticipation of a major event. Remember, we had the OPEC Plus meeting, which came up, I think, on the 2nd of this month, and there was an endorsement to the to the current output policy, which is cutting oil production by 2 million barrels per day. So they held on to that um, decision which they made at the end. I think the last quarter of last year, they held on to that decision, and the market has reacted significantly well in that regard, as we saw the breakdown retest of the $78 level to signal that sellers are still very, very strong in this market. And in addition to the structure here, you can see that the bullish trend line, which we identified last week, appeared to have been broken around the $75.50 level, an area which also shares a beautiful confluence with this demand zone that we have here. So, with the breakdown of the $75 level, breakdown of this bullish trend line, are we going to continue to see bearish momentum in the future? Or is there going to be some buy pressure again, resuming around the $73.50 level, which at one point in time has been holding some level of buying power in the past? So this is what we are going to be looking forward to this week. So we are at a critical point in the market right now as price action appears to be trading around the $73.50 level at the end of last week's trading session. So during the new week now, we want to see how price action will be reacting to the structure to decipher what our next line of action will be. Are we going to be seeing a buy pressure above the $73.50 level on our lower time frame to incite the beginning of another wave of bullish momentum? Remember, we had the breakout of the bearish trend line here a couple of weeks ago, and from a technical standpoint, we should expect that price might likely come back to do a retest of that structure to incite another wave of bullish momentum. So that is one scenario I'm looking forward to for this week. Then another possibility that could happen is if price breaks down to $73.50 level significantly well, and we start seeing selling pressure below the structure on our lower time frame. This could be a signal that sellers might likely come in, probably bringing price back into the $70 level in anticipation of another wave of bullish momentum, or it could even break down that structure to um, push price further to the downside. So these are the things we are going to be looking forward to. So in order to have a better perspective into what is really going on here, I was able to identify some simple structures on the 4 hours time frame, which I will be using to guide trading activities for this week. And in that regard, we shall be scaling down to the 4 hours time frame. And here on the 4 hours time frame, this is what I was able to identify here. If we zoom this out a little bit, you will see that price has been caught within a channel here between the $82.50 level, which has been a strong resistance point since the month of November last year. And then we have the $73.50 level stroke the $72 area, which has also been a strong support level where we have a demand zone here identified already. So since price is trading around the $73.50 level now, it's important that we remain patient to see how price action will be reacting to the structure to decide if we are going to be buying or selling the US oil for this week. But rest assured that I will be jumping in the comment section of this video to give you an update on what my expectations are after monitoring how participants in this market will be reacting to the $73.50 level, a level which has a strong memory for buying power in the past, to decipher what our next line of action will be. I hope this video has been of immense help in making your individual decision on the US oil for this week. And if it did, kindly support this project by clicking the like button. You would also want to follow me on my TradingView platform at Darksherry, spelled DARCSHERRY, so that you can be part of my daily commentaries as I normally um, share my ideas on every video I have here on this platform. Thank you for watching this video, and I look forward to seeing you right in the comment section as we get prepared for the new week, and that will be on Monday. Thanks once again, and do have a wonderful evening. Bye bye.